Welcome to the Real Estate Investment Hub, where you can learn how to grow, scale, and optimize your real estate portfolio through our conversations with investors and thought leaders in the real estate industry. Let's move on to the episode. Welcome back to the Real Estate Investment Hub podcast. Today we're here with Vince Tong, the principal and lead broker of Signature Mortgages. And if that wasn't enough, Vince also recently opened a upscale sushi bar, Tozen, on West Broadway. So before we get into today's topic, maybe tell us a bit about what inspired you to open that sushi bar.
Oh, I mean, if you can tell, I love to eat. Well, first and foremost, thanks guys for having me on the podcast. Honestly, it's a pleasure.
Thanks for coming.
I love to eat. In our industries, we see a lot of clients, see a lot of business partners at kind of those restaurants, bars. It's a very translatable business in that sense. So I kind of thought that, after doing 10 years of mortgages, I wanted to try something else. Obviously, we'll still work in the mortgages, still keeping busy, but, have a new venture and kind of keep yourself busy in other senses. I think everyone kind of strives for that freshness and that drive again after doing something for so long. So, yeah, more or less. And it's been fun. It's been interesting.
Yeah, it seems like you're having a great time running that so far.
And the restaurant is amazing.
It's a social industry, very social industry. Yeah, it's been nice.
I guess you just sort of fell into it based on the nature of our businesses.
Yes. And I partnered up with Tom of Tom Sushi. That's who we partnered up with. I've been kind of pestering for quite some time and saying, I want to run a restaurant with you. I want to run a restaurant because we used to go there all the time, right? And after 4 years, he finally caved and said, okay, let's do it together. And 1 year later, after, you guys work in real estate, permits, renovations, all that red tape from the city, we're up and running, and we're very excited.
Congratulations.
Yeah.
Congratulations.
Thanks, guys.
For those that haven't gone yet, Tozen Sushi on West Broadway, definitely check it out.
967 West Broadway.
There you go. So today's topic, by popular demand, is financing for self-employed individuals.
Yes.
And also business owners.
Yeah.
If you don't mind, Vince, for the folks at home, maybe going over quickly how traditional mortgage works.
Of course.
And how that differs from self-employed and business owners as well.
No, of course. So, with traditional employment sources, let's say you're a salaried individual, you work for a large company, it's pretty straightforward at the end of the day. We would use a 2-year average of income, whether it be T4s in Canada, W-2s in the States, or just, your year-to-date pay stubs even, right? Actually, we did a lot of that this year because it's at the end of the year, or was the end of year,
right.
Just recently. So we would just see the 2-year average. A lot of people work overtime or they get bonuses. So if it's higher, we use the higher income. If your base salary is, higher than your 2-year average, no problem as well. We can use just the base salary as long as you are on a full-time employment kind of schedule, right? With even traditional employment, as long as you're on salary or you have guaranteed hours, like for hourly work, even if you were in school for public health or for computer sciences, that counts as an employment history. Like even though you're in school, like a graduate program or a master's program, that counts, right? Even an undergrad program counts because you're working in that field. And then as long as you jump into the field, let's say 3 months or 6 months, most banks are okay with it. They don't love it if you're on probation, but most of the time we can make it work. So very standard kind of qualification when it comes to salary income. Self-employed is a little more unique, right? Because as self-employed contractors and incorporated individuals, our income fluctuates, whether it be because of market fluctuations or because of just how you pay yourself. Some people want to pay themselves less 1 year to save on taxes. We do have clients that go through the traditional route, like self-employed individuals who pay themselves a healthy amount of income. Or they're incorporated and have a substantial amount of income retained in their company. We can go through the big banks a lot of times for those, assuming they have enough income to service the mortgage. But for those self-employed individuals, like, we deal with a lot of people who do labor work, like gardeners, carpenters, and they make lots of money. Like they're good on income, but they just don't report it as much because their overhead's fairly high too. Materials, maybe subcontractors and all those things, right? So even though they might make a certain amount of income, they don't report as much because they have all those deductions.
Right.
Yeah. And the bank understands that, and we have programs for that as well. They recognize that, you do have a lot of deductions because you're a self-employed individual doesn't mean that you don't have the income to service it. Traditionally, let's say you make, for example, a carpenter makes $80,000 to $90,000 a year, okay? But then because of all their labor costs and all their material costs, they only claim about $20,000 to CRA.
Right.
Well, the bank is only going to look at about the $20,000 to report it on your T1 generals. But there are lenders out there who are called alternative lenders, still banks like Equitable Bank, Community Trust, Home Trust. Those are some of the larger ones. They will actually use 12 months of bank statements to quantify your income.
Okay.
Wow.
Versus using, the traditional T1 generals and NOAs sort of thing, right? The only requirement is ideally 2 years in the business, but there are exceptions. If you do 6 months, 12 months, they can make those exceptions as well.
Right.
And if you look at 6 to 12 months of bank statements, they basically use the deposits to quantify your income, and then they minus off any kind of recurring costs like telecommunications or vehicle costs and stuff like that. So that helps a lot of borrowers in a lot of ways borrow extra money. Versus, again, let's say $20,000, they qualify for a $100,000 mortgage. If we can use about $60,000, which might be closer to their true income, they start qualifying for a $350,000 mortgage. Okay, there are some cost ramifications with it as well. The cost is going to be a tiny bit higher when these alternative programs, maybe about 1% higher on interest rate, and there's a 1% fee as well.
Right.
But it's really the math actually works out very simply. Two ways. First and foremost, if you can get the mortgage, in real estate, you guys understand, the cost of acquiring the property is more than, a lot of times offsets the cost of a higher interest rate.
Yeah.
It's called opportunity cost. If you decide to wait before you buy the property, you might not be able to get into the market later
Very
down
true.
the line, right? It's an upfront cost. So the opportunity cost, one, it allows you to get in the market versus waiting 2 years of reporting higher taxes in order to buy in this market. Secondly, the tax savings. So a lot of people, let's say they reported $60,000 in taxes versus $20,000 in taxes. That's a pretty big jump. That's a $40,000 difference. Okay, that tax on the $40,000 might be about $15,000, $16,000, $17,000 that they're paying extra per year in income taxes. If the mortgage cost is only about 2% higher, let's say on a $400,000 mortgage, that's only about $6,000 to $8,000 more. So you're netting actually a $10,000 savings per year.
That's true.
If you're doing the alternative mortgage versus a traditional mortgage. If you were to say that you want to squeeze and pay more income tax. So a lot of ways to do things in the mortgage world, more than people kind of know, because they're so used to just dealing with the TD banks, the Scotia banks, which we deal with as well.
Yeah.
But we have a myriad of options for sure when it comes to self-employed individuals, and it just depends on the person.
So Vince, me and Chris, what we're seeing a lot with our clients is that they sort of fit in that category where they have a full-time job, so they're collecting employment income, but they also have a side hustle where they're earning income that way as well. So for those folks, what is the process for them to get financing?
Okay, yeah, that's a good question actually, because we've been seeing a lot more of those in the recent years after COVID. Canada's an expensive country, especially in the provinces of BC, Ontario. We're seeing a lot more of that where people have more than one stream of income, right? For the employees, people who are employed by an employer, there's different ways of doing it. It depends on your situation, right? I have a client who worked at the city. She was a full-time employee, and then she had a side hustle, so to say, where she was guaranteed about 14 hours a week. So in that instance, that 14-hour week was a remote position. So when we presented to the bank, even though she didn't have a 2-year average of the income, it made sense, right? It made sense that you could work a 40-hour week and maybe the extra 14 hours remote, whether it be on the weekends or the weekdays. It was reasonable. It was reasonable, right? And there were actually similar lines of work. So in that instance, it made sense. For the bank, sometimes they think that if you work an 80-hour work week, even though, we work quite, there's a lot of us self-employed individuals who work long hours like that. If they were to say they had 2 full-time jobs, the bank might deem that unsustainable, right? And they would probably want to see 2 years of average, similar to the self-employed individuals we talked about, because they want to see proof that you were able to work those 2 jobs, right? It's sustainable,
Makes
right?
sense.
So in that case, it depends. It is case by case again, but I'd say that if you do have 2 jobs, as long as you're of guaranteed hours, and the kind of workload makes sense for, again, the average person,
Right.
the bank's more than happy to look at it, even without a 2-year average, as long as there's guaranteed hours or salary, stuff like that.
And of course, the employer would have to provide that
employment letter, and the pay stubs have to make sense too, right? Everything has to match. But yeah, we see a lot of that now. Honestly, it's not as uncommon as you think.
Okay,
Yeah.
that's
Even Uber drivers, everything else.
Yeah.
I think there's a lot of people doing that, especially right now.
Uber drivers a little different because they're self-employed. Okay, so self-employed individuals, different from the employees. Thanks for that segue. Is that you would need a 2-year average, right? Again, same thing, and we kind of talked about it before, but between ourselves, that with lending, we mentioned the alternative lending with a slightly higher rate, but we'll use bank statement approach. But we also use lending, the big banks will use like the T1 generals or the employment letters and pay stubs, sort of thing, right? If an individual has a salary job and they have a little bit of income from self-employment and they really want to use it, but they don't have 2 full years reported, we'd really have to look at the file and think what makes the most sense, right? Does it make sense to pay a higher interest rate in order to get that extra loan amount? Is that worth it for you? Is that going to get you the property that's going to appreciate the most? Is that going to be their best use of your opportunity cost? Or does it make more sense to just use the base salary, try to go through those traditional lenders like the big banks, TD, Scotia, HSBC, RBC, BMO, CIBC, standards, the big six, right? Does it make sense to try to squeeze it there, get an exception to get you a little more money and go through that route and save you a little bit more on interest and still get you a property that might not be your perfect ideal property, but definitely good enough where it will retain its value, appreciate, and you'd enjoy living there, right?
Exactly.
So that's where a little bit of our expertise as mortgage brokers and your expertise as real estate agents come into play. And we do this all the time with each other, right? We kind of analyze the cost benefit for those clients to figure out what makes the most sense. And that's our job. We present it to them and they make the decision at the end of the day.
Absolutely. All we can really do, like you said, is put the numbers together, present it to them, and they make the decision. But it's great that we have that synergy. Chris and I, before even coming here, we were talking about how great of a mortgage broker you and your team are.
No, guys,
Best,
too much.
Best in the city, honestly.
No, definitely not. Definitely not.
Well, with that being said, why don't you tell us a bit about Signature Mortgages and your team?
Sure, yeah. Well, Signature, we founded it, how many years ago now was it? I think about 6-7 years ago. I've been a broker for 10 years. So I initially joined Clear Trust Mortgages. We're under Dominion Lending. Most people in real estate know who Dominion Lending is. It's the largest one of the largest brokerage networks in Canada. And Clear Trust is actually the #1 firm in DLC.
Amazing.
So we're part of a pretty large company, I would like to say. We're about 350 brokers strong across BC, Alberta, and Ontario. And I'm one of the shareholders of Clear Trust. So I'm one of the team leads of Clear Trust, and hence why I have a team at Signature Mortgages, which I manage. So me and my direct team, we do about $120 million a year in mortgages.
Wow.
So we kind of focus on our own funding, your clients,
Yeah.
and take care of our own clientele. But on top of that, I manage a team of about 40 brokers. Signature as well.
40.
Yeah. So we have a fairly sizable team because at the end of the day, what we notice with a lot of brokerages and mortgage brokerages or real estate brokerages is that training is fundamental to success.
100%.
You need that kind of leadership and guidance because if you don't get that, it's easy to fail in this industry. Being 100% commission sales agents is not an easy lifestyle, right? So our CEO, Robert Afan, when he built Clear Trust and it started getting bigger and bigger, he really wanted to divvy up the company into specialized teams and have a team lead or a principal per team to ensure that we give sufficient training and sufficient support.
Right.
Because there's no way he can handle 350 agents on his own. His phone would be ringing nonstop, right? It would not be able to, be conducive lifestyle for him. So because we have our own teams to manage, I think that the overall company is very, very successful because we have that hands-on approach and have that support. We touch quite a bit of deals, right? And we've gone through those experiences. A younger broker might not know what happens if something goes wrong in a law firm for whatever reason, for title insurance, home insurance, right? Or they say one document's missing. They might not know that it might be a simple document. They might not understand what a statutory declaration is, right? These little things that can cause a broker a lot of stress and maybe even panic the client could be easily solved just by one phone call to us. And we could be like, this is how you deal with it. It's not a problem. Tell them this or get them this, and it's done. It saves the client a lot of headache during the process, and then the overall client experience is better, which will help you with referrals, which is at the end of the day kind of our business, right?
Yeah, exactly.
We're a referral-based business.
Built on
So
referrals.
we always tell our brokers that client experience is paramount. Like being able to, well, A, do the job correctly, obviously,
Yep.
but B, give a good client experience. So important, so vital to your success in this industry.
No, agreed. We're seeing that a lot too. It's great that you have a very hands-on approach. We're big believers in doing that as well.
Yeah,
Right.
a lot of my friends always say, "Well, what time do you have to like sleep or do anything?" I'm like, "Well, I have no kids, right?" So
Yeah,
right now,
exactly.
Never.
me and the wife have no, not never, but me and the wife right now we have that kind of lifestyle where we're happy to grind now and do the work now because we have no other responsibilities personally, right? It's just us two for now, and obviously the family. But
Very
Yeah.
inspiring, Vince.
Thanks,
So for
guys.
the folks at home that are looking to get into the market, how can they contact you and your team?
Oh, I mean, we have a Google page online. Me, my partner Jessica, we all have Google pages on Google. Instagram, we have a Signature Mortgages Instagram page as well. Phone, you can contact me by phone. We'll put our phone number in at the end of the video, and it's email, right? The standard kind of vectors you can find us, definitely.
Awesome. Now, Vince, being one of the top brokers in the city, we know that you have a lot of high net worth clients and
Yep.
individuals that you work with as well. Where do you see them putting their money? Because this is kind of it's kind of a gray area right now for a lot of our clients and
Yeah.
a lot of people listening, where we do think there was a significant opportunity in the first 2 quarters in 2024.
Oh, 100%.
But everyone's trying to really chase the golden goose and trying to figure out exactly where to put their capital.
Yeah.
So where are you seeing people put their money?
Well, let's just segue a little bit backwards into what happened in December. And a lot of people didn't really see it, even though we saw it, right? We had an unprecedented December. It was so busy for
Busiest
us.
one I've ever seen.
We worked all throughout the holidays, just because there's a lot of people putting offers in. Bond yields dropped close to 0.8%, like a substantial amount, 0.9% even. They dipped really, really heavily. So fixed rates dropped a lot too. We're seeing a lot of fixed rates in the low 5%, even high 4% right now. And we only had like a month of that in March 2023 where rates dipped and everyone flooded the market. And you saw the market stats, sales peaked a lot during that time, right? We saw that in December too. Bond yields are dropping. Inflation's been sitting about 3.1% for the past 2 months. We'll see the next inflation report. I think it's January 11th for December. So we'll see how that goes. But the Feds seem to be, the Bank of Canada. I use Feds and Bank of Canada interchangeably, even though Feds is more for the States. But they're probably going to be on the sidelines, right? At this point, they think that we're going to be, creeping downwards slowly, especially with everything so high, mostly mortgage costs. Things have gone up about 48%, right, in mortgages. So with rates dropping so much in December, a lot of people came out of the gates, out of the woodwork, and started investing in investment properties. As I kind of mentioned before, like lots of people jumping on the market right now. I think that we're kind of in that happy space right now where it's early in the year that not a lot of people are shopping. Unfortunately, we don't have as much inventory either because no one wants to move during the holidays, right? And we're still kind of in that holiday phase. But prices are still negotiable. People are still getting good deals, and I've seen them. Like we've had about 3 or 4 accepted offers just last week. People are still getting pretty decent deals in terms of the real estate market, and rates are kind of low right now. They're not as low as they were. We're not going to go back to 1.8%. Never say never, but it's going to be a very, very, very long time. You know, I think pre-COVID rates, 3.8, 3.9. Oh, for sure, that's going to be on the horizon fairly soon. How soon? No one can predict, right? But I think for now, even though people were used to 6%, almost 7% rates for 1 or 2 year fixed, just 6-7 months ago, the break to 5-4% for a 3-year fix is it's a welcome chance for them to kind of re-enter the market. In terms of first-time home buyers, definitely a lot of people moving into smaller condos. And to answer your question, although I went all the way around to answer your question, to see the investors right now, they're also looking for similar things. I think at the end of the day, the lower price point, I should say, condos, townhomes, they're always going to fly off the market. That's the barrier to entry, right? A lot of people have families. They require a one bedroom and den at the minimum, the young families, or a 2-bedroom, right? Those are flying off the shelves. Townhomes, 2.5 to 3 bedrooms, flying off the shelves, right? Small detached. I still see a lot of people moving to small detached, but I think for investors, depending on their portfolio. The reason I say that is because a lot of investors, they already might have 1 or 2 properties, and with mortgage rates still a little higher, stress test still here, right? Qualification still a little harder than it used to be, right? So they might have maxed out their budgets for getting another single family. So I see a lot of investors personally in our pool, because we do a lot of first-time home buyers, second-time investors, some high net worth clients. We do some commercial as well. I'd say most of them are still looking for those residential builds, as well as, potentially the commercial land assemblies. It's kind of funny because that's a big split. We're kind of not seeing as much in the middle for the single detached, more for people to buy to live in, but more for like the lower end again, condo, or the high end like land assembly, $3 million properties that they want to, build out into a multifamily or something with the higher FSR and stuff like that.
Right.
So we're kind of seeing those mostly in the past few months.
Okay. Well, thanks for sharing.
Yeah.
I think
let me counter your question. Where have you guys been seeing for your clients invest?
Small detached for
Small
sure.
detached,
like
okay,
a lot
good.
of, I think a really big opportunity right now is
100%.
even going all the way out to Abbotsford.
Oh,
where
yeah,
you can
for
get
sure.
detached under $1 million kind of thing.
Yes.
If you were to run the numbers, you are probably cash flowing a little bit.
Yeah.
If anything, it's neutral, which
Very
is
difficult
in the Vancouver market.
GTA
Neutral
area.
is already
Yeah.
because where most people are paying $500 to $800 a month out of pocket.
Yeah.
Exactly like you were saying, I think that a lot of people are moving into the more quote unquote entry level homes, 1.5, 2 beds. A lot of people are buying assignments right now as well. I think it's an insanely good time for assignments. And we did cover that in our other episode as well.
That's actually very true. A lot of assignments coming out. A lot of big towers coming out.
And a lot of people, that bought at like literally, almost 0% interest rates are now like, oh, interest rates go up? Oh, I didn't realize that my payment, it's payment shock, right?
Yeah, payment
shock.
shock.
A lot of people are assigning.
And they can't go and qualify for the mortgage.
They can't even qualify for half of the mortgage, right? So they're literally leaving the credits in there.
Yep.
They're selling for even below what they bought it for, and it's just right now. I think that's one of the best deals.
I definitely think so as well. Yeah. The only problem with assignments, as you guys know, for developers, most of the big developers don't let you put that on MLS, right? Yeah. So that's another big issue. Getting the word out there. So it's important to have
definitely tough.
Strong realtors like you guys with this large, vast network to kind of push those out so the clients have access, right?
Absolutely. That's why it's even more important to have a realtor that is already part of a network like that.
Like you said, it's true.
If you're on the selling side, it's very difficult to market that, right?
Even mortgage brokers as well. Like Vince was saying, sometimes if you're a newer broker, just we all know this too. Just the smallest thing within the deal can really push your whole day off. And
100%.
You're like, oh my God, I'm missing this thing. My whole thing's gonna collapse. But if you are someone with a decade of experience like yourself, you can really look at it from a high level. It's like, oh, okay, I've done like 40 deals exactly like this.
Exactly.
And this deal went wrong, and this thing went wrong. Like your life isn't going to collapse. I know how to fix it. It's going to happen right away.
I'd say 9 times out of 10, we know how to fix every problem that comes our way. Some problems, they're new, and we're always learning. Again, 10 years in the industry, hundreds of millions a year, doesn't change the fact that I can still learn from mistakes, and we are all going to encounter things that we've never dealt with, right? It is what it is. It's just part of the industry. But having someone in your corner, it makes a big difference. So we do our best.
Well, that's why you should work with Vince and his team, guys.
Stop.
Signature Mortgages.
You know where to find them. You mentioned it earlier. I think that wraps up this episode of the Real Estate Investment Podcast. Thank you again, Vince, for joining us.
Thanks, guys, for having me.
We're actually
Thank you so much, man.
on our way now to grab lunch at Tozen.
Yep.
Let's go.
So
Let's
for a
get some
limited
food.
time, guys, if you mention that you were sent by Chris and you get a free bowl of rice.
No, you get a 10% increase on your bill, okay?
Oh,
You
yeah.
get a premium on your bill.
But jokes aside, the sushi there is phenomenal. So
Thanks,
if you
guys.
haven't gone, absolutely recommend. Where is it again?
Oh, 967 West Broadway. It's
There
on
you go.
the corner
967
of
West
Broadway
Broadway.
and Oak.
There you go. Thanks so much, Vince.
Thanks for having me, guys.
Thank
Appreciate
you so
it.
much, man.
Take care.
And that wraps up this episode. Thanks so much for listening. If you like the episode, leave a review and follow our socials linked in the episode description. Make sure you share this episode with someone you think would get value from this podcast. We'll see you next time.